Hey everyone, welcome back. Hope you're well. Hope you had a good weekend. So, we've had a couple of requests now talking about doing an overview of the chip fab equipment part of the semiconductor industry. So, a couple of weeks ago, talked about ASML Holding, top chip fab equipment maker, huge implications for the industry overall. In that video, I talked about why I like the chip fab equipment makers more than I like integrated device managers like Intel and even chip foundries like Taiwan Semiconductor. But I want to talk a little bit more about what this chip fab equipment part of the industry is, and what better time to do it than right now after Applied Materials, the biggest company in this space, just finished out their fiscal year 2022 earnings report. So let's get to it. Before we get started, just a quick reminder, if you find these videos helpful, we'd really appreciate it if you hit the subscribe button. And if you feel particularly inclined to do so, we'd love it if you could share it with your social media networks. Okay, so let's first do an overview of the chip fab equipment, or here going forward, the CFE industry. So first up, just a quick update. So this is data that is provided by semi.org. It's an industry association for chip manufacturers, for equipment makers, and this organization puts out a lot of estimates for where fab equipment sales are going, the WFE, wafer fab equipment sales are going. Mind you, this estimate is just for the sale of the equipment itself, the equipment that's used within a factory, within a fab, to actually manufacture chips. And there are a lot of these pieces of equipment that go into a fab that start with everything from the actual material itself that a chip is made from, all the way to testing the end product before it gets shipped to a customer. So basically, you can see here, this is a cyclical industry, but it's growing. You see the huge boom in equipment sales in 2021. 2022, the new estimate is $99 billion in chip fab equipment sales for this year. So another nice jump over 2021. But we've seen some of that growth stall out here as of late. At the moment, the overall estimate is for a slight decline to about $97 billion in 2023. But these are moving targets. They get updated very frequently. This assumption is basically being made because we're in the midst of a cyclical downturn for some parts of the chip industry, notably consumer electronics and the memory market. But this can change because a lot of these expectations are that capital expenditures on equipment picks up again by the second half of 2023. So this is just kind of an overall big picture backdrop. You can see the growth here for fab equipment, WFE, nice growth trend line, and we can expect this to continue to ramp up over time, especially as actual chips themselves. Global annual spending on that is expected to exceed $1 trillion by the end of this decade. Currently on pace to hit about $600 billion this year. So this WFE sales estimate, that's completely separate from that, but it will gradually grow along with the ultimate sale of chips. All right, moving on. Slide 2. Again, these slides put together by our resident data viz, Casey. Appreciate her putting this together for us here. So this is just a breakdown of where that $99 billion in 2022 is being spent. And I hope this addresses some of the questions I've received about what the industry breakdown is for the WFE part of the industry. So you can see here from this pie chart, the big heavyweight in the room is Applied Materials. Again, they just finished up their fiscal year 2022. They did $25.8 billion in sales. One of the oldest companies around, not long after the chip industry even started to exist in the first place, Applied Materials came along designing advanced specialized equipment. They got started back in the 60s, so big head start. They have a broad portfolio of products. We'll talk about that here in a moment. But right behind them is ASML, 21.3 billion in revenue over the last trailing 12 months. So huge company, but much more of a specialized play, making that EUV, extreme ultraviolet, and DUV, deep ultraviolet equipment that makes the most advanced chips out there. 21.3 billion, high growth company. Wouldn't be surprised to see ASML overtake Applied Materials as the largest company in this space within the next few years. We have another one here, Tokyo Electron, obviously based in Japan. Lam Research, another favorite that a lot of investors like. They make a lot of equipment for the memory market, and KLA Core rounding out the top five at 9.9 billion over the last 12 months. So big drop off here for number five. There's a bunch of smaller players as well. I'd also point out that collectively, these five companies, they do about 93 billion in trailing 12-month sales. So that would seem to appear that only leaves about 5% market share for everyone else. However, bear in mind that all of these companies, all five of these companies, generate anywhere from, say, 15 to 30% of their total revenue in actual service fees, ongoing services, software, other ancillary things that they provide to chip fabs, the actual companies that do the manufacturing. So bear in mind that the first slide that I showed, the 99 billion, only includes the equipment itself. It doesn't include any services or software that companies like Applied Materials, ASML, and so on provide the industry. And one final slide here, just going from really big picture and then concluding with this last slide here, some more specific things. This is a slide that Applied Materials provided during their fourth quarter earnings report. And this is just meant to be a brief overview of what the company does. So again, like we talked about in the last video on ASML, link below in the description on that if you didn't watch it. ASML is very specific in what they do, EUV and DUV machines. Applied Materials is much more broad in what they provide the industry. Again, they've been around a long time, a lot longer than ASML has been. And so you would expect that, a bit more diversification here in their business model, but they don't do anything in EUV or DUV specifically. What they do provide, though, is they help enable new architectures for chip designs, new structures. They also help with supply chain things, so sourcing and putting together new materials for chips. You'll notice here in this one line item, new ways to shrink, the fourth one down. So while Applied Materials they don't make the EUV machines themselves, they do provide some other related equipment that provide EUV enablement. For example, the patterning. So you can think of like an EUV machine, they shoot the laser at the chip, but the laser, if it didn't have a pattern or like a template drawn on the actual wafer, it wouldn't really do much. So Applied Materials makes the templates that ASML's lasers shoot at the wafer. So they're related, even though they may not sell the actual high-end equipment. They kind of go hand in hand with what ASML is doing. And of course, packaging. So after chips are made, packaging all these things together, a really important part of the process going forward as the industry moves a little bit towards this chiplet type of business model, where a lot of smaller chips kind of get pieced together to make a more complex, larger, and more powerful unit. Applied Materials is helping at every level, every step along the way, propel Moore's Law further as it gets more difficult to keep Moore's Law going. And then also beyond Moore's Law. Once Moore's Law is completely played out here within the next few years, or by the end of the decade, or whenever it is, Applied Materials is going to be a player here, selling equipment to help fabs continue making more advanced chips, to help customers meet ever increasing computing power needs. And just some really quick highlights here from Applied Materials' fourth quarter earnings update. They actually reported a year-over-year increase in revenue of 10%, better than expected. I was pleased with this report. Now, the one thing to bear in mind here is, yes, revenue did go up 10% to close out what was a very tough 2022. We had supply chain issues again, the restrictions placed on exports to China, a lot of other things going on. So revenue did go up 10% year over year, which is impressive, but bear in mind that earnings per share did decrease again, 2% year over year. Because the company is working through some of these issues, it's sort of compressing profit margins here in the interim. And even better, on a full year basis, revenue increased 12% in 2022, and adjusted earnings per share increased 13% for Applied Materials. So overall, really great closeout to the year. But we might have at least one more quarter or two of this situation where the company continues to report revenue growth, but year over year earnings per share declines. So for the first quarter of fiscal 2023, which will wrap up in the first month of 2023, Applied Materials said at the midpoint of their guidance, revenue should increase about 7% year over year, but their adjusted earnings per share, they said, could decrease 7% or as much as 12% compared to the first quarter of 2022. So some lingering issues here that are keeping a bottle on Applied Materials profit margins. Now, I've mentioned a number of times now in these presentations that Applied Materials and ASML are my favorite stocks within the WFE portion of the semiconductor industry. Let me show you specifically why I like Applied Materials. I'm going to show you my ticker terminal here. So here's the stock chart for Applied Materials over the last year. No surprise, super ugly looking chart. Stock is down 30%, almost 30% over the last trailing 12 months. And you can see things bottoming here. It looks like possibly bottoming here twice, June, July, and then again here in early mid-October. Let me show you what the company did concurrent with these two bottoms, because remember, bear in mind, WFE companies like AMAT, like ASML, remember the visibility they have on the industry. They can see years down the road because they know what their partners are planning to build. It takes a fab years to get up and running. And so therefore, ASML and Applied Materials have this luxury where they get some visibility into demand many years down the road. So let me just show you what the company did with this ugly looking stock chart. So this chart is again provided by Applied Materials during their last earnings update. And it gives a brief breakdown of what their balance sheet looks like quarter by quarter over the last year, and what they did with some of their cash, how they used their capital. So you'll notice here in the fourth quarter and throughout the year, the total cash and investments line, they really got aggressive using up not just the free cash flow that the company generates, but also dipping into the balance sheet and using up cash and investments. Well, what for? Remember, the company makes fixed research and development based on what its customers need in the future. And they didn't use up this cash on research and development. What it got used for are share repurchases. Here at the bottom, you can see over the last year, total of $6.1 billion repurchased. Basically, that's like in a way, it's an alternative to a dividend. one that you don't pay tax on. It's a bit more volatile because it reduces share count, which in turn boosts earnings per share growth over time. So maybe not as clean as just getting cash in hand, but you don't owe tax on share repurchases though either. Basically, though, 6.1 billion repurchased in the last year, which works out to, on an annualized basis, well north of a 5% dividend yield if you're looking for an equivalent to that, plus the small dividend they also pay. And you'll notice again, remember the ticker terminal chart, when things were bottoming out in the market for their stock in the early summer months. And then again, here in October, you can see the company kind of got really aggressive with some of that cash, 1.8 billion deployed, $1.5 billion deployed. So obviously Applied Materials can't be that aggressive with their share repurchases forever, at least not at this point, because they'll run out of cash. I expect that those share repurchases will probably start to ease up a bit in 2023, but you really want the company to get aggressive with these share repurchases when the market is punishing the stock. That is exactly what Applied Materials did. If you're a believer in dollar cost averaging, the process where you take a fixed amount of money and invest it in a stock, let's say monthly or quarterly or whatever, you end up buying fewer shares when the stock is up and more shares when the stock is down. That's essentially what Applied Materials is doing here, except they increased their dollar cost average amount when the stock was down. So really, I just look at things like this and I think that management has a lot of visibility in what's coming down the road and a high degree of confidence in their ability to execute on the growth that they're seeing. Otherwise, you wouldn't repurchase this much stock. Obviously, they could be wrong about this. It may not work out, but Applied Materials has been doing this for a long time, and we know a lot of money is getting dumped into chip manufacturing right now. That's why the CHIPS Act was passed. Other acts like it are being legislated around the world. The world has decided that chip manufacturing is really important, and companies like Applied Materials and ASML, I think, are a fantastic way to get in on this movement, far more than the IDMs like Intel, or even the foundries themselves like Taiwan Semi and some of the others. Leave me some feedback in the comments below. Would appreciate it. Let me know what you find helpful, what you don't find helpful. Also, stay tuned. Later this week, we're going to talk a little bit about ON Semi. So, one of those IDM companies like Intel, but I've got a story to go along with it that I hope provides some education for everybody. Also, a couple of interviews. So stay tuned for that. Again, if you find these helpful, would love it and appreciate it if you hit the subscribe button. If you're inclined to do so, share the videos with others if you think they will benefit as well. And I'll see you again later this week. Take care, everyone.